Now in this video we'll be talking about one key aspect of the smart money concept, including demand and supply zones, psychology behind trader liquidity sweep and all of that. So if you identify a good supply or demand zone and you place your trade, all of a sudden the price move against you, hit your stop loss before moving in your favor. This is what we are going to be explaining, how to avoid these scenarios. You see a good supply zone like this, price comes, rejects and still hits stop losses before moving down, right? So this is a smart money concept in which I'm going to share with you. So I'll share with you a couple of scenarios that you can use to increase your win rate as a demand and supply trader, smart money trader, whatever you are trading. So you are going to learn the strategy, the psychology, demand and supply, liquidity. You are going to learn how to identify these structural highs, taking advantage of this concept of smart money concept to apply it in any strategy. Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. Let's start by demonstrating. Now we have liquidity concept. Liquidity simply has to do with the number of other stop losses that are lying within a particular zone, right? Anywhere traders are going to be placing that buy or sell orders, whatever those zones, liquidity lies. So if let's take this as an example, if you have this zone to be a supply zone, for instance, we have a supply zone line here, okay, and most people are going to be selling here. The zone above there automatically become a liquidity zone. All right, we have the same scenario, which is the contrary when price is going up. All right, maybe we have an uptrend, price leaves behind a liquidity zone. Okay, when it leaves behind a demand zone, for instance, let's say this is our demand zone here. Below this zone will be liquidity, because most stop losses are lying below here. Many people want to take this advantage and then they will be entering. All right, in another situation, if you have a structural low or a structural high, let's say this is a trending market creating higher highs and higher lows, higher highs and higher lows. If this is a higher low, for instance, right, and price actually has to pull back to this zone here, some people will be considering this, because normally when price hits a zone like this, for instance, okay, it becomes, it's more like a support zone becoming resistance, or a resistance zone becoming support. In this situation, if price creates highs like this, okay, it broke through, it's automatically going to find resistance here when it comes back the second time. All right, and in this situation the zone below become a liquidity zone, right? So and the reason I'm explaining this for you to understand the concept, we have two scenarios. Okay, we have price create very strong bullish momentum like that, right? And then we have very strong bullish momentum up there, and price leaves behind a demand zone here. Okay, now there are two ways in which this liquidity concept can apply here. Sometimes price will pull back to this zone here, right? And upon pulling, many people will be expecting price to get to this zone for them to be taking their trades. There are situations where price will not pull back to this time, to this zone here. What price does is it will come down here, maybe reach this zone here, create a support. Okay, it can create a support like that. All right, now when you create this support here, many people will now be considering entering. Okay, some people will be entering based on this support that has been created before this zone here, right? Other people will want to be entering their trades to be targeting these zones above there. Now when price create this, automatically, remember, liquidity now lies below this zone before they measure support or they measure demand zone, right? Now in this situation, what usually happens many times is this: price will come down and then grab liquidity here, then tap to this zone. When you grab liquidity below here, because most people will be entering, you will tap to this zone and then head higher. All right, so when you understand this concept, you already know that this is what usually happens. Now that's the first scenario, right? Now the second scenario is that price will move. For instance, we create a strong zone like that, leaving behind maybe a supply, a demand zone. Okay, if it leaves behind a, let's say this was the last bearish candle that led to the strong bullish move, right? Many people were expecting price to move, right? Sometimes price will come quite all right, so you move down to this zone here and then tap to this zone, induce traders into buying, right? If you induce traders, many people will buy here, price will move down a little bit, because automatically we have liquidity line below this zone here. And what happened, we have sometimes a very sharp candlestick, which is, which respond immediately with a strong closure above that zone there, and you see that price will tend to move like that. Okay, but the supply and demand zones still apply, because they know that these are the zones where people will be looking to be entering their trades. Right now, how do you take advantage of this situation? Anyways, let me go to the live chart so that I show you exactly what I'm talking about. Okay, now this is an example here, right? We have the second example. This is a very strong zone here. We consider this to be a supply zone, a strong supply zone. Look at this bearish candle with a lot of momentum that has left behind a fair value gap. All right, okay, so many people are expecting to be entering here. We have a lot of liquidity line above this zone here, bro. So price move back, post back to the zone, react to it, right? You see these bearish candlesticks, and what happened, it moves down a little bit and induced many people to entry. It moved up and tapped to another zone, which is up here. So it taps to this zone up here, and then what happened, it drops. All right, it comes up and taps to this zone here, and then drop powerfully. All right, we have the other scenario here. Okay, we have a supply zone here, right? We have a minor supply zone, we have a main supply zone here. So price, after moving down, what it happened, it moved up. So when it moved up, what happened, it created a sentiment here. Many people see this to be consolidation. All right, so it created this sentiment of, rejecting once, twice. Okay, and now many people are selling. There are people who are selling here, maybe targeting this zone here. So what happened, price instead move up now, and then tap to the main zone, which is the main supply zone there. And then what happened, price drops powerfully. Okay, so just from this you can understand what exactly happens. And because it happens like this, if you take advantage by entering, you see that you are going to catch a very good move, right? Okay, in this situation, the two situations have already been explained. Now look at another scenario here. All right, we have another scenario here. We have a major supply zone here. This is it here. You see, it's very beautiful. Look at this candlestick. This is a very good confirmation with this imbalance created. So price created an imbalance here between these weeks here. Okay, and this imbalance means that price has to come back and fill the imbalance. Okay, price comes down and fill. Okay, what happened, induce many people, because it got rejected, start going up. So many people are entering, others entered here, and then normally we have our liquidity there below, because I know price has to grab this liquidity before having the the momentum to move. And what happened, price moves down and they responded exactly with a strong bullish momentum. Now for someone who identify not even as supply, maybe just identify it as a structural low, as I mentioned earlier, this could be a structural low, because here price actually moved up like this. Okay, came back, created this low before moving to create this high. So basically this is a structural low here where many people could still be looking to enter, right? So price will pull back now after this rejection candle. People will expect to get moves like this. Okay, maybe targeting this zone here. What happened, price instead closed below, and what happened, there was a single candlestick. Now this single candlestick is a high confirmation with very strong bullish momentum, and it closes immediately above there. And what happened, price moves. So if you took advantage of this, you see, you would have got a very big move. So that is simply the concept here. You can understand why sometimes it usually happens that way, but it might not always happen. Now this is, I'm currently in this trade based on the 15-minute time frame. I'll show you guys what exactly happened. We have a minor supply zone. Okay, this is it here. This is it that we had here. Okay, price move, create that zone, came back with this sentiment. Many people are looking to buy here. So price induced people, moved up a little bit. What happened, it came back, grabbed liquidity here. What happened, we had an immediate response with a strong bullish candle after this moves here, while others are shorting. What happened, price move. So as I speak to you right now, I've entered this trade. Actually, I've entered this trade, and price is actually moving up already in a great deal. So that's basically the concept, guys. So you need to understand this concept, right? Sometimes they can increase your win rate. All right, they can increase your win rate. You understand, even when you get stopped out and you see price still close above the zone or below the zone, you should understand why it happens that way. So that's what I have for you guys today. If you enjoyed the video so far, please give me a thumbs up. Please make sure you subscribe to the channel if you're new by hitting on the subscribe button and notification bell. See you in the next video.